Good morning, everybody. Thank you very much for joining this webinar today, for taking some time out of your most likely busy schedules to attend this webinar and to be able to receive some information from us. Before we get started, I would like to let you know that today's session will be recorded and shared, as mentioned above, meaning that if you do have to take a call in the meantime, feel free to do so, because you'll receive everything tomorrow in your email box, so you can watch it over and over again and share with whoever you'd like to share. Can everyone hear me well as well? I see my colleagues nodding, so that is a good sign. Perfect. Alrighty. Well, first of all, nice to meet you guys. My name is Ludo. I'm a expat buying manager at Expat Housing Network, and specifically in the region of Amsterdam, the so-called Amsterdam metropolitan area, so also Zaandam, Almere, Amstelveen, Haarlem, pretty much everything that is within a 30-35 minute car ride from Amsterdam itself. So if you guys are particularly looking in that region, most likely you will be speaking with me actually during the entire process as well. Before we get into any further details, I just introduced myself, but I would also like to know who I'm actually talking to. So I'm going to launch a small poll just to get to know you guys and see where you are. So maybe we can also adjust the webinar a little bit to the specific crowd that we have with us here. So feel free to take the next 20 or 30 seconds to, of course, it's not obligated, but it could be nice to fill in some questions and well, make it a little bit more interactive that way. I'll wait a few more seconds. We see some nice answers coming in. The majority of the crowd is between 25 and 34 years old, which is the perfect age to buy a home if you want to avoid transfer tax. We'll get into that a little bit later. A nice even balance between singles and couples or families, which is nice. And I would say actually a lot of people are looking for Almere, Amsterdam, but also Almere and some other places. Feel free to pop in the chat, by the way, if the city that you're looking for isn't mentioned here. We're always curious to see if we can potentially start a webinar for a different city. All right, I'm going to end the poll so we can get started. I'm not here by myself. We always say that greatness is achieved in the agency of others. What do we mean with that? Is that, well, like I said, I can't run this all by myself. I do it with a lot of colleagues. And as you can see, we are, well, most of us are not from the Netherlands actually, or have lived abroad. For example, my colleague Katie from Cyprus, Giovanna from Brazil. We have a colleague here today, Rafaela, who's also from Brazil. Good to know, guys, by the way, Rafaela is our Q&A expert. She will answer any questions that you guys might have during this webinar. So feel free to pop anything in the Q&A bottom, or in the bottom right, I think, if there are any questions, so that that can be answered during the webinar as well. All right, some things about the Expat Housing Network. We are not traditional real estate agents. What do we mean with that? Is that, well, first of all, most of us know what it's like to move and live in a different part of the world. So we try to, and we'll see that further on, have you avoid making mistakes that we made in the past. We help with buying a home and with renting a home. So I would say a traditional real estate agent also sells properties and also rents out homes. We are merely focused on helping people find a home, so either a purchase home or a rental home. And even though in the current market that's a little bit more difficult to letting out or to selling a property, we think it's important to have a service that is completely focused on being able to find someone a home. We don't charge a commission, so no percentage or whatsoever. It's a fixed fee. It doesn't matter if you're buying a 100K home or a 5 million home. It's always a fixed price. And EHN adds some value as well. First of all, selling agents take our offers a little bit more seriously than someone that doesn't have a buying agent. We can no longer take, or we can sometimes book viewings from selling agents when other people are not able to do so. We see that selling agents prefer to actually have someone at the property who has a buying agent, so that they know they're professionally looking, serious about the process, and can avoid any mistakes that other people might make. Besides that, even though the majority of us is not from the Netherlands, we do have a lot of Dutch speakers in the team. For example, myself can definitely review all the Dutch legal documents and property documents to make sure that not only the house is pretty and the price is right, but also to make sure that the actual inside and legal stuff is as it should be as well. Very important point. This one we'll touch base on it a little bit later on, but we help define market value through market data research. What it comes down to is that we can help you define what the actual market value is, instead of basing the price on an asking price or something that you just feel is right. We of course will inform you about rules and regulations, and we help you to, or we make sure that you don't make the same mistakes as we make. Then, like I said, I'm not here by myself, not only with Rafaela, but actually also with Robin from Mr. Mortgage. Robin, would you like to introduce your team?
Yes, definitely. Thanks for hosting again, and thank you everybody for joining as well, of course. Good morning. My name is Robin Uitenhage. I save you the trouble of trying to pronounce my last name. And I'm joined by my team, not now necessarily, but in day-to-day life, with from left to right, Cesar, my fellow financial specialist, Egle, our growth marketeer, and on the far right, Özkan, which is kind of our mortgage guru or Google, whatever you like to name it. He really knows everything. So I pride myself to know pretty much everything, but he really knows everything, all the rules and regulations, and he's kind of our knowledge source there. So that being said, what we do, we value a personal approach to our service. We do things a bit differently from a bank, where banks usually give basic information to start with, but we take you by the hand to walk you through this kind of a maze that it can be. But essentially, we want to make it as easy as possible for you, because it doesn't have to be stressful. It's definitely exciting, this whole process. But that's it. Let's keep it positive, and that's what we do. We take you through the whole process together with your real estate agents, Expat Housing Network, of course, and together we can find the best way to secure your mortgage and financing to make sure that you find a house that you're in the end very happy with. So that's basically what we do. Anything that you have to sign always will be in Dutch with any banks. Obviously, we'll supply translations, because the main thing is for us is that you understand what you're getting yourself into, and you understand what you're signing. It's a different language usually, so then it's important to know what's going on. So that's basically what we do from A to Z, guide you through this whole wonderful journey, essentially.
Perfect. Thanks very much, Robin. Well, enough about ourselves. I think let's add some value to you. That is obviously the goal for today. Some things that are good to know, right? Before you move forward with the whole buying process, there are some things that we think, okay, good things to know. Actually, Robin, I'm going to pass this one on to you, because it's mortgage related. That is your field.
Definitely. NSG. It's a Dutch abbreviation for Nationale Hypotheekgarantie, freely translated National Mortgage Guarantee, and that's kind of an insurance arrangement. What it's based on is essentially something that was built up approximately 10-15 years ago now. What happened is that property values decreased at that time, and people had a higher mortgage than that the value of their houses were. So what happens then is that you have remaining debt left on your house. If you cannot pay the mortgage anymore and you have to sell your house, you have remaining debt, so then you have trouble upon trouble, right? Because you cannot afford the mortgage, you have to sell your house, and you still keep this remaining debt there. This is where the National Mortgage Guarantee comes in, because what they do is they say, okay, if this happens, if you close a mortgage under the conditions of National Mortgage Guarantee, then we secure this remaining debt. So if it happens, then we'll cover this remaining debt. Now, they have some rules and regulations there. One of the most important things are that you cannot purchase a property for over 355,000 euros or the value of the property. So that's important to keep in mind. So that's the limit. If you're below that limit, then you're good. Then you can close a mortgage with any bank and include this national mortgage guarantee condition. Now, what it ensures is this guarantee, but is that necessarily what's going on now? Is that what is expected? Not necessarily, because we still see property values increasing ever so slightly. Maybe in the long term, it might level out a bit. I don't necessarily expect a decrease in property value, but that's what we need a crystal ball for, of course. But that's one of the situations where it's unlikely that you have to sell your house with the remaining debt. Also, because you have to repay on the mortgage. So why would you use this national mortgage guarantee? Because it also gives you a discount on the interest rate. You have to pay a lower interest rate. That means that you can borrow more potentially. So all of that makes a difference there. You have to pay a one-off fee to get into this national mortgage guarantee of 0.6% of the mortgage that you take out. These details I'll definitely tell you later on as well, but that's basically what it is. You can close it, you have better conditions to your mortgage, but the limit is 355 in this year.
Cool, thank you. Well, that's something that can be very interesting for people with a budget of around 355 for sure. Okay, cool. Well, and then something that I think everyone has heard of before. It's the transfer tax that we currently have in the Netherlands. What this is, it's merely a tax that you have to pay once ownership from one property is transferred to from the seller to the buyer. Therefore, transfer tax. Now we have a couple of different kinds of transfer tax, or different rates is maybe the better way to put it. Generally speaking, we have 3 rates, where one of them is the most known, and that's the 2% transfer tax. So if we look at the middle, or actually the far right example, if you are both over 35 years old, buying a property over 400,000 euros, you always pay 2% transfer tax, either if you're buying by yourself over the entire share of ownership, of course, 100%. If you're buying with the two of you, you are both 50% owner of the property, and therefore paying both 2% over 50%, coming to a total again of 2% over the 100%. Now we have another rate, which is the most favorable one, and that is the 0% transfer tax. Now you have to fulfill some requirements to be able to actually have a transfer tax exemption, pay the 0%, which is €0, of course. And the requirements are, is A, you have to be under 35 years old. You have to purchase a property that is 400K or lower. And it has to be the first time that you're using this exemption in the Netherlands. If either of those 3 are not the case, then the transfer tax is still applicable, the 2% is still applicable, and the exemption is off the table. Now, what also happens sometimes, it's a question that we get a lot, but my partner is under 35 and I am over 35. What happens then? Well, that's when we look in the middle example. Kate is 37, John is 33, and they're buying a property of 400K. Well, what happens then is we're going back to the share that you have in the property, what I mentioned before. Kate owns 50%, John owns 50%. Kate pays 2% over her 50%, and John actually pays 0% over his 50% share, coming to a total of 1% in total. So that is also a possibility. Now, the other rates that we have, and that is not that much applicable, I think, for the crowd that we're looking at today, but that is the 8% transfer tax. And that is actually applicable if you are buying to invest. So if you want to buy to let or flip a property or anything like that, if you're not going to use it as a residential property yourself, then the transfer tax will always be 8%, even if the property is valued at 100,000 euros, even if you're 25 years old, whatever, it will always be 8% if you're not going to use it as your own residence. If you still have questions about the transfer tax, like I mentioned before, we'll share everything with you tomorrow. When you're actually in the slide, on the bottom right, you see visit the transfer tax checker. You can press on it, fill in your specific details about the property that you're looking in, your specific situation, and then it will actually show you how much transfer tax you will have to pay. Cool. Then back to the people that we are talking to today. I am very curious where you are in the process. Are you still in the orientation phase? Are you already searching for a home? Maybe you already have an offer accepted. feel free to again answer some questions in the poll here. It's always funny. I think we have always like 1 or 2 people that actually have an offer accepted already, which is pretty amazing, especially in the current market. So let's see if we have some of those today as well. I think the majority is still researching, and the majority also didn't have a chat with an agent yet. So I think we already have a question actually popping in. I'll answer that question right away because it is regarding transfer tax. Francesca asks about the transfer tax. What happens if you're under 35, live in the house, and you want to buy, and you have flatmates who pay rent to you? Well, this is a fair question. First of all, let's just look at the basics of buying a property if you're under 35. If the purchase price is under 400,000 euros, you will not have to pay transfer tax, right? If the property is under 400K, you're under 35 and you haven't used the exemption yet, then transfer tax is not applicable for you. However, if you are going to rent out the property itself totally, then you're looking at a different mortgage type, because that would be a buy-to-let mortgage, would be seen as an investment, and therefore transfer tax would always be 8%. However, if you are going to live there as your own residence and you decide to have a flatmate there, that is a little bit of a different story. Banks don't really mind that too much. You can take a flatmate in the house, have him pay rent to you. We do advise you to set up some kind of agreement, just to make sure that there are no discussions whatsoever at the point that you might want to sell the home or anything like that. But having a flatmate is not such a big issue. Then still transfer tax will be 0% for you. It's only at the moment that you really are going to use it completely as an investment that transfer tax will turn into 8%. So I hope that that answers your question. I think we've given you enough time to fill in the poll as well. So I'm going to end that. And then we are good to move on. All right, let's have a chat about well, renting versus buying. Both can be nice. Both have its pros and cons. We'll first look at why you should actually rent. It's funny that we address that in a buying webinar, but there are some pros on actually renting a home. Top to bottom, renting your home gives you a lot more flexibility, right? It's easier to find a rental property. If you find something 9 out of 10 times within 2 weeks, you can already move in. And if at one point you decide that you want to again move to another country or want to go to a bigger home or whatever, it is a lot easier to just quit the rent, have 1 month's notice, and be out of there. So it gives you a lot more flexibility. Besides that, you pretty much pay no taxes or any don't have to spend any money on maintenance. The majority of the maintenance is for the landlord. Therefore, for example, if the heating system breaks down, the roof falls off, windows break, whatever like that, those are pretty expensive costs and will come back to the landlord. So that's nice. No taxes is not entirely true, especially in municipalities like Amsterdam. Garbage tax and water tax is actually paid by the person living in the property. So either the landlord, if he lives there, right, or if he has a tenant, then the tenant is paying for that. But the more expensive taxes like property tax, sewage tax are for the landlord as well. So your yearly costs are going to be lower. Besides that, there's no down payment required besides the deposit that you make, which you will get back at the end of your rental term, of course, if you leave the property like you should. As you know, with buying a property, you actually have closing fees as well. Buying a home costs money. We'll touch base on that a little bit later on, but it actually costs money to be able to buy a home besides paying the purchase price. Now, a con of owning a home as a purchase property, it's pretty much in line with what we said above. You have to pay more taxes. All the maintenance is for you, especially if you're not into a homeowners association. Literally everything comes to your own plate. And if at one point you decide to move and the market is a little bit different than today's market, it can also be a little bit more difficult to actually sell your home. Yeah, then you're tied to a property, and 9 out of 10 times you first need to sell your home before you can actually have the cash available to buy another property. We hope that you're still interested in buying a home after hearing all this, because there are definitely a lot of pros to owning a home as well. First of all, stability, right? You are the sole owner of the property, and no one is there to say, okay, your agreement ends next year, or no one can say, I am not happy about the agreement that we have, I'm going to kick you out. You are the sole owner. So it gives you a lot more stability. Also, no increasing rental prices or anything like that. You just know what's up when you own the home yourself. Of course, you're still paying on the monthly basis, but within rent, you're pretty much throwing it away, right? Or well, paying off the mortgage of your landlord. Whereas if you own the property yourself, your monthly payments will go right back into the bricks of the home. And therefore, you're building up equity. So hopefully after an X amount of years, you'll be able to sell not only with a little bit of a nice profit, but also have paid off an X amount of your mortgage. And that is also something that you can put right back into your pocket. And currently there's quite a favorable mortgage interest deduction, meaning that the interest that you pay over your mortgage payments are quite well tax deductible. And then some cons that are again in line with what I mentioned above. Rents will keep rising. There are no tax benefits for tenants, and all the money that you are paying on rent is going directly to your landlord. You are not building any, creating any kind of wealth while renting. Now, looking at the financial side, I'm going to point back to Robin to explain a little bit on how the renting versus buying works in that side.
Thank you. So when you compare renting versus buying, it really depends on what your personal situation is, right? So what Ludo already mentioned, there is a down payment when you buy a property, or more importantly, there's an investment that you have to do. That investment you can see on the right bottom, closing fees for a property of 525 are approximately 23,000 euros. Now, when you compare the two, I see that the interest rate that is mentioned is a bit outdated, unfortunately. Right now, it's pretty much doubled at this time. Now, just to shortly touch on that subject, that interest rate, sure, it increased quite significantly. Right now, it pretty much returned to a more normal interest rate, whereas the last 2.5 years, it was kind of ridiculously low. So it kind of normalized the interest rate market again. That being said, when you compare two properties, renting versus buying, pretty much the same property, when you rent a property, you have to pay approximately 2,250 euros per month. If you compare that to the monthly mortgage payments, you can see on the right bottom again in that overview, monthly payment for the annuity mortgage, that's when you have a level monthly payment, that would be 1,832 on this interest rate. Now, let's say the interest rate is higher now, so let's say it still is approximately, let's say, 1950, so 1,950 euros. So when you compare those two, you already see that you pay less mortgage than you pay rent. Now, from that side, it already starts making sense. But really, when you consider what a mortgage payment is built out of, it's repayment of your mortgage and interest rate. Now, when you look at rent, that is essentially money down the drain. You don't get anything back. Obviously, you can use the property, but you don't build up anything. Whereas when you buy a property, you build up equity, like Ludo already mentioned. That is built into the monthly payment that you do, because part of that monthly payment is repayment of your mortgage. So your debt decreases, meaning that when you sell it, you get that money back. And the other part is rent. Now, the rent is something that is really money down the drain, and that is, or interest, sorry. That is interest, and that's money down the drain. And that's what you can see here. The interest payment in the first month would be approximately 691 euros. Now, let's round it up to, let's say, 725 with the current interest rate. So then the trick is, you can see what the massive difference is between the rent that you pay, 2,250 money down the drain, and the interest money down the drain of, let's say, 725. When you then see that you also have closing fees, the trick is then, so when does it start making sense to actually buy a property instead of renting a property? So the earning back period is approximately 1.5 years, so 18 months approximately, 15 to 18 months. So that's when it financially starts making sense, but that's a really short amount of time. So it really starts making sense when you're looking to live in a property for, let's say, at least 2, but preferably 3, 4, 5 years. Then it really starts making sense to buy a property. So again, we are not trying to tell you that everybody should always buy. First, have somebody look into your situation, Does it make sense to rent or buy, and then make that decision, considering what the difference would be. On the left, you can also see that the rent that you would pay per year is 27,000 euros. And then when you compare that to the closing fees, that's also already something that you can see, well, you save, in the end, you save quite a significant amount when you buy a property. So that's basically the difference. When we go to the next slide, you can also see what the equity is that you would have built up in 5 years based on this current that interest rate, and that's over 70,000 euros that you would have as a profit if you would sell the property then. Doesn't really change significantly when the interest rate changes, because you still have to repay in 30 years. So in 5 years, you also build up an equity of 70,000 euros. Considering that you also has the investment of about 23,000 euros, it's very likely that you still have a profit of 50,000 euros in 5 years. So that's a significant difference from renting a property.
Perfect. Thank you very much. Yeah, and the 50,000 mentioned is just, of course, from building back your equity.
Yeah, sorry, Ludo. Too. I saw a question popping up. Is an interest rate of 1.58 still possible in the current market? That's what I mentioned in the first slide. And this interest rate is a bit outdated, so we'll revise these calculations for our next talk. So the current interest rates, depending on what your situation are close to 3%. Kind of depends if you input personal savings as well. But let's discuss that in a more personal chat later on.
Yeah. Thanks for the addition. Indeed, that is true. Okay. Cool. Next slide. Well, we all have seen and heard that the market has gone up significantly in the last couple of years. So let's touch base a little bit on what those market drivers are. First of all, like maybe mentioned before as well, is that there are quite some fiscal benefits currently in play. For example, the transfer tax exemption. Again, buying under 400K, under 35 years old, first-time user, then you don't have to pay any transfer tax. It saves quite some money, makes it a little bit more interesting to buy a home. There is a good interest rebate currently applicable. There are no capital gain taxes in the Netherlands. So if you buy a property, we see that a lot now. People have bought a property in Amsterdam in 2016 for 250,000 euros, now selling literally for 400, 450 sometimes. That capital gain is not taxed at all. Something you can put directly into your pocket or into a new property. So that makes it quite interesting to buy. Currently, there is still a tax-free parent donation, meaning that your parents can donate for this year, it's still 100,000 euros up until the end of the year via a purchase of a property that is not taxed at all. And I think in 2023, but correct me if I'm wrong, it's around 30,000 euros, something like that, that is still applicable. And then in 2024, it is gone in total. Did I say that correctly, Robin?
Yeah, you did. I just want to give one addition there. Sorry to interrupt you, Ludo.
No, that's fine.
There's one addition here. When it happens quite frequently that people coming here to live in the Netherlands have family abroad, transferring money from abroad as a gift to here to the Netherlands. Then this tax-free situation doesn't apply, because you usually, and again, it's different situations, of course, and have it checked out. But usually when there's money coming in from abroad to the Netherlands, that's not taxed anyway. The tax authorities are happy that more funds are coming into the Netherlands. So by all means, have it checked that if you expect a gift from abroad, if it's taxed or not. Usually it is not.
Yeah. Well, another bullet point we can add, actually, I think. Then besides that, the interest rates are low. Of course, we just mentioned a rate of 1.58. Okay, it's not that low anymore, but still, if we look back in, I think 2014, 15, interest rates were about 6, 7, 8%. So we're still at quite a low percentage, which makes it attractive to buy a home. On the other side of the balance, the rents are quite high. And expected to keep rising. We actually see something that is quite mind-blowing for me, but that the majority of the asking prices for rents are being overbid on. So if something is listed for example, 1,800 euros, it's not abnormal that people actually say, okay, I will take it for 1,950 per month, for example. which is quite a decent amount. That's pretty crazy. And as long as the offer is still lower than the demand, yeah, prices will keep rising. They can do whatever they want with certain rules and regulations, but as long as there are just not enough homes for the amount of people looking for a home, prices will always keep increasing. All right, closing fees, something that we had touched upon already. Things that you would need to have the cash available for if you are thinking of buying a home. From top to bottom, transfer tax, we already talked about it. Generally speaking, 2% of the purchase price, can be 0%, can be 8%, but I would say typically speaking, 2% of the purchase price. Then depending a little bit on where you are buying, you will of course need to have a notary. In Amsterdam, you also need to have a notary for a purchase agreement, so it's a little bit more on the higher side. In other cities in the Netherlands, you will only need a notary for the mortgage and the transfer deed. Typically between 600 and 1100 euros per product that you get from the notary. Then a financial advisor, either a bank or a mortgage broker, between 1500 and 3400 euros. Then a typical real estate agent charges around 1 to 2% of the purchase price. Good to mention again, we don't. We charge you a fixed fee. We'll come back on those fees later on. You'll need an appraisal if you want to get a mortgage. This is a person that actually evaluates the home. So of course, we're going to do a market research, but unfortunately, my report will not be accepted by the banks. So we need an appraiser to come in to actually evaluate the home as well. Prices are between 550 and 600. Technical inspector, something that is not obligated, but nice to know, especially in cities that are a little bit older, to know if the property is still in a good state, around 425. If you do not speak the Dutch language, then you need by law to have an interpreter present at the signing of the transfer deed and the mortgage deed. So funny thing, actually, at the notary is obligated to do the entire meeting in Dutch and go through the titles in Dutch, which is very strange because he can of course speak English, and everyone's sitting there like, okay, we have no clue what you're talking about. But I guess it's also a sneaky way to keep the interpreter business going. And an interpreter then in your own language is needed. You'll need a bank guarantee, either a deposit or a bank guarantee to make when buying a property. This is typically 10%. The deposit is 10% of the purchase price. Now you can either do that, of course, in own savings, but you can also choose, because it's typical that you might not have 10% of the purchase price just laying around, that you ask the bank for a bank guarantee. And this pretty much means that they will make the deposit on your behalf. And this costs around 250 euros or around 1% of the guaranteed amount. And then if you do want to make use of the NHG, then if to enter, I would say that insurance, you pay around you pay 0.6% of the mortgage amount. Now, if we look on the right side, we actually have another column asking if it's tax deductible or not. Everything that is related to a mortgage is tax deductible. So we're talking mortgage deed, a mortgage broker, the appraisal, and also the NHG. Unfortunately, the government still doesn't think people need a real estate agent. So unfortunately, my costs are not tax deductible yet, but I really hope that in the future they're going to change that. But yeah, good to keep in mind. So the funny thing is transfer deed, again, not tax deductible, but the mortgage deed is. Then market is quite overheated, quite chaotic. So it might be good to give you some tips to actually win in the current market. First of all, very much look at value. What do we mean with that? To give you a little bit of an example, we here have a property, looks quite nice, it's empty, has an asking price of 395. I'm gonna just go over, so we have three prices here. We have asking price, market value, and purchase price. Ideally, we like to have all three exactly at the same price, right? But unfortunately, that is a little bit of a dream, imaginary world. It's never the case, unfortunately. So here we have the asking price at 395. After a market research, we see that the market value is actually at 415,000 euros. And eventually the property is sold at 435,000 euros. Well, what do we see is the difference between the asking price and the purchase price is in this case 10%. Quite a decent amount. and yeah, 40,000 euros. That seems, or it sounds also like a lot of money that you have to overbid, which it is, of course. But actually, if you see the difference between the market value and the purchase price, the overbid is only, in brackets, 4.8%. Still 20,000 euros, still a big amount, but yeah, the overbid, if you see that in the news, someone overbid at 4.8%, you think, okay, that is a normal and decent amount. And the reason why the overbid is normally mentioned as 10% is because in the Netherlands, there are no rules on how high or how low the selling agent can put the price on Funda or on the market. So he can quite honestly put a property on Funda for 100,000 euros while the market value is actually 415. Yeah, then he has a overbid of around 200-300%, which is yeah, not fair, because the overbid is still only between market value and purchase price, and therefore 4.8%. So what we see in the next example, if you put the asking price at 375, that the overbid was all of a sudden 16%. And that is where you hear all the stories coming from in the media saying, hey, the prices are rising drastically, 20%, 25% overbid, especially in Amsterdam regions. Well, actually still the overbid was 4.8%. So that it's very important to know the market value, so that based on the market value, you can make a competitive offer. And this is, of course, one of the services that we offer as a buying agent, to, before we make an offer, do a good market research so we know exactly what the market value is, and base our offer not on the asking price, but we base it on the market value. And also disregard the asking price once we know the market value, because that's only going to screw with your head. If you look at those percentages, we only want to really look at the difference between market value and then the eventual purchase price. Besides that, a winning offer. What does a winning offer look like? Well, not always the highest price. And why is that? Because you might need a mortgage, right? And if you have a market value of 415, like we saw before, and you make an offer of 480,000 euros, yeah, that's amazing if you have the cash laying around to cover the difference between market value and purchase price. But if you make a crazy offer and you need that from a mortgage, yeah, then the seller is also going to say, big chance that you're going to get a mortgage tonight because the property is not valued at 480, and therefore we're not going to move forward with you, because then we have to start over the selling process again. So making a good price is very important there. Besides that, offering some security to the seller. So how I normally say it is you have this thing called risk, right? And it can be at either the seller or at the buyer. In an offer, you can say, I want to make the offer subject to a certain amount of financing. To go back to the example we had before, 415,000 euros at market value, we make an offer at 430. Then we can say, okay, I need financing of 415,000 euros, and the difference between 415 and 430 will come out of own pocket. So thereby you say, okay, I can offer you a little bit more security because I'm going to cover the difference from own pocket, and I don't need a full mortgage. So then the risk is a little bit more on your side instead of on the seller side. You can also do it drastically and say, even if I don't get any financing, I will still move forward with the purchase. Then you pretty much take out the entire subject to financing clause. In that case, the risk is definitely on your plate and not on the seller's plate, and therefore the seller is a lot more comfortable to move forward with your offer because he doesn't have a lot to lose, so to say. What you can also do is put the risk on the seller's plate by saying, I need a full mortgage. And then there is still, even though he accepts his offer, even though you sign a purchase agreement, there can always be a risk where your mortgage is denied, meaning that the purchase still dissolves and the seller has to find another buyer. This is, of course, very nice for a buyer because it gives you a little bit more security and a little bit more so-called insurance. But in the current market, the seller can really pick and choose, and will go for a offer that has more security for his side instead of on the buyer's side. Then we want to make an offer that has the least amount of hassle. What I mean with that is that if we want to do a lot of technical inspections and whatnot before we actually sign the purchase agreement, it can be just a lot of hassle for the seller. And he 9 out of 10 times wants to move forward quickly. So he's like, okay, I accept an offer, want to sign as soon as possible and get this deal done, instead of having to do all these inspections, double checks and whatnot. And then the last one, something that we see adds more value actually in the last couple of months, offering a personal touch to the offer that you make. This is just a profile about yourself, saying, hey, you know, we love your home. We can't wait to start living here, to start a family or whatnot, just to give it a little bit more personal touch. Because even though sellers, of course, want the highest price and enjoy selling at a very nice profit, we do feel like the sellers don't want to contribute to the whole investors and chaotic market. So they'd rather sell to a person or a family that is actually going to enjoy a home than sell to a investor who is just going to flip it quickly and make a bunch of money on it. So it definitely helps to offer a personal touch on that note. And then third, doing a good due diligence. So we have the technical inspector that I mentioned before and the appraiser, both of them quite important, especially technical inspector also in the a little bit older cities. And the appraiser is something that you need to have, right, if you want to get a mortgage. The appraiser is also the person that eventually decides really how much, if your mortgage cap allows it, how much mortgage you can get. So if the market value is again 415, but you made an offer at 430, the bank will give you a maximum of 415. So it's very important that you keep this guy as a friend, because if he puts 415, you get 415. But if he puts down 430, you can get 430. So definitely important. And of course, technical inspector, for example, in Amsterdam, it's nice to know that it's not just pretty, but it's also in a good state, right? Question to you guys. Do you book them before or after your offer is accepted? Just put it in the chat. I'm always curious to see what you guys think is the best option to book your due diligence, guys. All right, I see some answers coming. I think the majority is saying after. We also have a before. Makes sense. Yeah, another the before. So I think we have around an equal amount between the afters and befores. Well, I won't hold up the tension a little bit longer. So actually, this is the sweet spot, and it's right after the offer is accepted. Now, why is that the case? It's because they cost money, right? The appraiser is not going to do his work for free. Technical inspector is also not going to do his work for free. Now, if we, in an ideal world, we make an offer and it always gets accepted, but as you might have known or heard, that it can take a few offers to actually get the home that you, to get an offer accepted. So if every time before we make an offer, we have to pay 435 euros to the technical inspector and 600 euros to the appraiser, it's going to cost you quite some money to actually at one point get an offer accepted. So that is why we say, we as a buying agent will do our due diligence beforehand, do the market research and make sure that the property is in a good state based on all the documents that we received. Then if we get an offer accepted, we immediately book the third parties, the technical inspector and the appraiser, to make sure that before we actually sign the purchase agreement, so that takes around 1.5 weeks, we have the market value from the appraiser and we have the technical reports to make sure the home is in a good condition. So we want to have them right after the offer is accepted. Now we'll touch base on this a little bit later on, but between getting the purchase contract signed and actually not being able to back out of the whole deal, you still have 3 days, a so-called cooling off period, where you can still change your mind without giving any reason. Now the timeline of the buying process as a total looks, of course, a little bit longer than the previous slide. I would say, generally speaking, the whole process takes around 4 to 6 months, depending on how quick you are and how active you are, of course. But we start on the far left. After this webinar, you've gained a lot more information. You think, okay, I'm ready to start the process. You contact Robin, you contact me, and we're off to go. Then we start the search, right? We want to find good, suitable homes that are within our price range. We go to viewings, we like it, and eventually we make an offer. Well, hopefully the offer is accepted. Then we are at the sweet spot that was mentioned before. We book all the third parties, the technical inspector and the appraiser. we have them come into the home, do their stuff, get the reports, and everything is okay to sign the purchase contract. And then, of course, we do so. Well, here we, at the moment that we sign the purchase agreement and we receive the appraisal report is also the moment that we can actually start the mortgage application. Of course, we still have the cool-off period that was mentioned before. So don't wait for the mortgage application only after the cool-off period, but just do it directly at the moment that you sign the purchase agreement so that Robin can press the big green application button and everything can start rolling. Then on average, it takes around 4 weeks. Well, this is a very generous time, I think, because Robin is typically able to do it in around 2 to 3 weeks, if not quicker. So, but yeah, I would say generally 4 weeks just to be safe. Better be safe than sorry. At one point, of course, hopefully the mortgage application is approved. This is also when we inform the seller that, well, the deal is really final, everything is arranged, the bank will transfer the money to the notary and all is okay. We receive a statement of completion from the notary. It's a fancy word for final invoice. On this invoice, all the costs that are to be paid regarding the whole buying process will be on that invoice. So we're talking actually my costs, Robin costs, but also transfer tax, the notary fees, any investigation fees, sometimes also the appraisal costs, any municipal taxes that still need to be charged, things like that. It will all be paid in one go to the notary, and the notary is then responsible to pay out accordingly. So that makes your life a lot easier because you just have to pay one bill instead of paying like 10 or so. Well, we still have the final inspection. So of course here at the tech inspection, we see the home pretty much for the last time. Then we have the whole process of arranging financing. And then actually only at the final inspection, we go to the home again to make sure that the property is still in the same state as agreed upon. So we've actually had a case where we bought a 3-bedroom apartment, and then during the time that we signed the purchase agreement and we went to the technical inspector or the final inspection, the sellers were like, yeah, I never liked that wall. I never liked the 3 small bedrooms. So we took down a wall and now it's a 2-bedroom apartment. Yeah, that is, of course, something that is not done. You can't do that. So that is why we have the final inspection to make sure that everything is still as agreed upon. Then if that is the case, fantastic. We go to the notary, we sign the transfer deed, we sign the mortgage deed, and then we have the key handover. So that is when you are officially the owner of the property. Ownership is transferred from the seller to the buyer. And well, that is the moment that you get the bottle of champagne and celebrate. That is the nicest moment, I would say. Then you still have around, it's a little bit of a gray area, but around 2 months of liability term. So this is a period where you can still go back to the seller and say, hey, the oven all of a sudden quit working, what's up with that? Or the windows get stuck a lot, what's up with that? Then they are still a little bit liable for these kinds of defects in the home, and you can still ask them to fix it. Of course, the longer you are away from the transfer date, the more room for discussion is possible. So we always advise you within the first week of owning the property, do the whole wear and tear of the house, open every window, open every heater, and make sure everything works as it should, because within that time period, you can still go back to the seller and say, hey, this is not as agreed upon. Cool. All right. Well, we have a lot of, we always get a lot of questions. So we summarized a few that we frequently get asked, and we'll go through them. And then if there are still any outstanding questions, feel free to pop them in the Q&A and we'll go over them in a kind of a live session. First of all, question for you, Robin. Is it actually possible to get a mortgage with a temporary contract or as a freelancer?
Yes, it is definitely possible. There are some things to consider. Let's start with the temporary contract. So essentially what a bank is concerned with is the future, right? So when the future is not entirely sure, when you have temporary contracts, they what they see as a risk is that if your contract ends, what is your employer then going to do? So if you have a temporary contract, your employer can give you a so-called letter of intent. It's not really a letter, it's just a box to be ticked on a standardized form, the employer statement. That's a statement where your employer states, well, hey, this is exactly what the situation is, this is the person, this is our company, this is the contract type and the income. And then there's a different, a separate box to tick that they intend to keep you on as long as your performance stays up to par and if the financial situation of the company hasn't changed significantly. So what that means, it's an intention. It's not legally binding for your employer. So pretty much all employers are more than happy to sign it for you if it helps you buying a property. Now, it is something that I will check in with you as well. So do you also expect to keep working in at this company? And if you expect to make a transfer to a new company, do you expect your income to stay the same? Because I don't want to overcredit you. I don't want to give you a higher mortgage than that really is sustainable for the longer term. So that's basically it. It is definitely possible. Now, should it be the case that you, for instance, have a specific job where you won't get this declaration of intent, there are still possibilities, but then you have to have a history of working in the Netherlands. So it's kind of a combination. By all means, if you have a specific situation or you just want to know what it means for you personally, let me know. Just schedule a call and then we'll dive into what it means specifically for you. So that's when you have the temporary contract. Just go to your employer and ask them for this declaration of intent. Now, when it comes to this freelancer or being an entrepreneur, owning your own company, all pretty much regarded the same. Then the bank will want to know what the future is as well, and they will base it on the past. So usually when you look it up on the internet, they will probably always say, okay, you need at least 3 years history of your company here in the Netherlands. Now, that's not necessarily the case. 1 year is sufficient, but 1 year does mean 12 months, 365 days that you have to have history here in the Netherlands of your company. History in the Netherlands means that it has to be registered at the Chamber of Commerce or the KVK in the Netherlands for at least 12 months. From that moment on, we can already use your income to base a mortgage on. Not to the full extent, we can then use a smaller percentage of it, and after 3 years, we can use the full amount. Now, if you have the specific situation that you have a company here in the Netherlands for at least 12 months, but you have a history from abroad, that you have the same company, but then abroad, there are also possibilities to use that history there as well, but under specific conditions. Again, so I'm saying, yes, there are definitely possibilities, but it kind of depends on your personal situation, especially when you're a freelancer. It's not as black and white as when you're employed. But again, just have it checked out by somebody that knows what they're doing, and then know definitely before you put in a bid, or actually before you start viewings already, because then you know what you can do, and you can do any viewing with confidence.
Perfect. Thank you. Well, next question that we get asked a lot is what actually happens if you want to leave the country after several years? Fair question. We're talking to a lot of expats, so I think that can definitely be the case. One of 3 things can happen. Option 1, you keep your home, but you keep your mortgage costs as well. So you're not obligated to live in the Netherlands if you want to have a purchase home here. So if you buy something and after 5 years you decide to go back to your home country or go to a next adventure, you can also just keep your home, keep it as a vacation home, potentially change your mortgage type, that's point 2 pretty much, and rent it out. But of course, as long as you own a property here and you still have a mortgage here, then you have to pay your mortgage cost and also your yearly governmental taxes, things like that. Option 2, renting out your home. So if you leave and you don't want to use that as a vacation home, but you actually want to use it as a rental property, that is also possible. Depends a little bit on how long you have lived in the home, how easy that is. And good to know is that the bank always wants to know this, because the bank is lending you an X amount of money, and they are using the property as a collateral. And the collateral is actually, or the home in this case, is worth less if there are tenants in it compared to a property that is lived in by the owner. So you will have to change your mortgage type from a residential mortgage to a buy-to-let mortgage. And that has some consequences in interest rates, but also the amount of mortgage you are able to get. And yeah, the banks are not always the easiest in changing the permission, but it is something that is necessary. maybe to touch base on that, I think it might come back later on, but it is. No, we'll touch base on that later on. I think it's regarding roommates. Point 3, what you can also always do, and no restrictions there, is sell your home without any penalty or capital gain taxes. So if after 5 years market has gone up, you've paid some nice monthly installments, and now you're ready to sell and use that cash in another part of the world, fantastic, no problem at all. Feel free to do so. Then, yeah, exactly. Here we go. Can I rent out my house or a room? Well, it's a little bit comparable with point 2. From a real estate agent point of view, yes, it's possible. There are no real restrictions there. I mean, you can easily rent out your house. We'll find a tenant for you, no problem on that. Can I rent out a room? That is also possible, maybe even a little bit easier if you buy a home and you think, okay, I need someone to pay the mortgage cost for me. Fantastic. Take a person in your home, draft up an agreement with that person, and yeah, he's ready to move in. But I think, Robin, it's a little bit more difficult than I just mentioned if you have a mortgage, isn't it?
Well, yeah, it has more to it. It's a bit more complex indeed. So let's start with the room. I think I saw the questions coming up as well. So can you rent out a room in your property? Yes, you can. When you call the bank and say, can I rent a room? They will say, no, you can't. So let me explain why is which. So you can rent out a room. A couple of things to consider. The rental income that you get when you only rent out a room is taxed to a certain extent, or from a certain extent. I think it's over 360 euros per month, if I'm not mistaken. But so anything more than that, you have to pay taxes over. And why the bank will say no and we say sure is because you can do it, but the bank is a bit has some restrictions there because, and this is something that Ludo mentioned before, if somebody lives in your house, there will be a tenant, and a tenant has certain rights. So if they live in the same in a property for a certain amount of time, they get tenant rights, and that means that they cannot be evicted. So that means that if you rent out a room and then you want to sell the house and you didn't agree on anything about what happens then, is they can say, sure, you can sell the house, but I'm staying put. So then they have to sell the house with you in it. And then that means that they have to sell the house as an investment property. And the property value of the value of a property when it's invested with an investment property, meaning somebody living in it, is significantly lower. So if you do it, and this is also where the concern from the bank comes from, make sure that you have a clause in the agreement saying, okay, this is kind of an eviction clause. When you move in here, you can live in the property, but I'll give you, let's say, a 2 months notice before I want to sell the property so they can find a new property. So that's basically what makes sense when you rent out a room. Now you can also rent out your full house, your entire house. What is important there? Sure, the bank is one thing. Also, if it's an apartment, check with your homeowners association if they allow it within the house rules, if you will, of the building. That's one of the things. One other thing is that when it comes to the mortgage, no lender, so if you buy a house for your personal residence, no lender will allow you to rent out the house just as it is. They only allow that if your company, so your employer will send you abroad for a specific amount of time, and then you come back and start living in the property again. So that's kind of pretty much the only reason they allow you to do so. So what you would have to do is change your mortgage from a residential mortgage into an investment mortgage. Now, I won't dive too much into those details. By all means, we can discuss that later on as well. Give me a call when you are interested in that. But there are possibilities. Just consider that you might have to lower your mortgage a bit because the down payment is required. But that really, again, it depends on your specific situation. It has to be changed. The interest rates for an investment mortgage are higher and you don't have this tax benefit. So those are things to consider. So sure, it is possible, but consider the consequences.
Always do consider the consequences. Life lesson, Robin.
There you go.
What a wisdom. No, thank you very much. Perfect. Next question. I think I talked about it a little bit before, but what is actually the 10% deposit I need to complete? I think rather simple answer. I think you always do, if you have to make a deposit, doesn't matter for what, if you're renting a car, buying a home, or well, going into a rental property. You do it to make sure that you fulfill your obligations pretty much. If you're renting a home, you make sure that you give back the property in the same state as you agreed upon. Same goes for renting a car. When it comes to buying a home, you make a 10% deposit, so that if at one point, yeah, you cancel the purchase, you flee the country, whatever happens, that you have made a 10% deposit, and that 10% goes to the other party that is not fulfilling their obligation. It can be both sides, either buyer or seller. That is the 10% that you have to make. Of course, this will come back to your account after the statement of completion is paid, the final invoice. If you make it in cash, it sometimes even is the case that at one point you get some money back if the mortgage is a full amount. But you can also opt for a bank guarantee. And the bank guarantee, like I said, is pretty much a document that states where the bank guarantees the deposited amount on your behalf. There are enough reasons not to make the deposit in own savings. You don't have access to that money for quite a while. You might not have the savings available. So then it can be a smart move to go for bank guarantee. Bank guarantee does cost money, like the 250 euros or 1% of the guarantee amount. But actually on the deposit, there's also negative interest, which depending on how long you are keeping that money in the notary's account, how high the negative interest is going to be. But that is really what the deposit is. It's just to make sure that both parties fulfill their obligation. Well, when do you make the deposit? If we look at the timeline, it is right, I would say a week after the mortgage application is approved. So first you request your mortgage. Once that is okay, then all the dissolving clauses, they are not applicable anymore because the mortgage is approved. And then you can pay your deposit either via bank guarantee or via savings. Well, our fees, not totally unimportant. From Expat Housing's point of view, we offer 3 packages, 4 actually as of now, but I think for now these 3 are most important. We have a smart package, a little bit more for the independent buyer, someone who very much enjoys surfing the web, looking for new properties, doesn't mind picking up the phone and calling the selling agent to book a viewing themselves. It's a little bit more of a independent package. Then we have the complete package for someone that might not feel comfortable doing things by themselves or just merely doesn't have the time to do so. This is where we also schedule the viewings for you and attend the viewings. We're there at the third-party meetings and really are there as a hands-on support. Good to mention with the smart package, of course, we'll also be there everywhere during the whole process, but I won't physically join you. I'll be there on the WhatsApp and on the Google Meets for any potential questions. Then we also have a new package, the new build package. And that is for if you're buying or looking to buy a new build property. It's a little bit different because of course we can't join you to viewings as there's nothing to view, right? The project is not built yet. We also can't do a technical inspection because what are we going to inspect? So it's a little bit different on how that works. But we will join you to, for example, meetings with developers, meeting with selling agents. We'll check all the points that are important within the new build project, making sure that the technical descriptions are as it should, that the kitchen has warm water, things like that, which will surprisingly is not always the case. So it's a little bit more focused on actually buying a new build property. Then Robin unfortunately doesn't work for free either.
Almost.
Almost.
These are our fees. It kind of depends on what your plans are. Of course, when you buy for the first time or for the second time, so it's first time buyer, but also when you already own a property and want to go to a new property, we work on a fixed fee of 2,999 euros. So those are the middle two. Those are the base fees really. So for that, we will first set up a whole financial analysis so you know exactly what your range is. It's not what banks do, for instance, just to give you a comparison and not to speak badly of banks, but our service is a bit more personalized in that sense. We don't give you an estimate of what you can borrow. That's and what banks usually do is then come back when you actually found a house and when you won a bid. We do things differently. We first start with financial analysis, so you know exactly what you can borrow based on the current interest rate. You know to the euro exact what your possibilities are and what bank makes the most sense at that specific time. We work with over 35 different banks, so we can always see what the best option is. So that's where we'll start. Then we'll guide you through the whole house hunting process together with Expat Housing Network, of course. So when you find a property, I will check what kind of implications all the specifications of the property will have on your mortgage. And if you can close a mortgage, we'll consider ground lease also, for instance, so you know exactly when you put in a bid that you know that you can it will be accepted, or you get the best option really to get it accepted. And so that's one thing that we that's basically what we do when it comes to the whole process. We'll, again, I already mentioned it, we'll supply translations for anything that you need. And we'll set up a financial advisory report. What that means is after your mortgage has been closed, then we know that your financial situation will have changed based on that mortgage that you took. So then we'll show you to what extent your financial situation has changed. Also includes financial risks that you might be subject to and how to mitigate this risk as well. Things like insurances that you might have to close, or you can. So that's what we do. And from the moment that you receive the keys in your hands from your new house, your mortgage regularly has a duration of 30 years. And for that whole 30 years, if you have any basic question, you can always contact us. If you consider an additional repayment, if you consider buying a new property, then we'll see what your current situation is and give you insight on what the possibilities are. That's pretty much for any of these packages. Refinancing, so it means when you already have a property and for instance you want to change it to an investment mortgage, or you have a higher interest rate and you want to reduce to a lower interest rate, you want to change something or increase your mortgage, for instance, that is refinancing your mortgage to $2,499. And on the far right, if you buy a house for over $1 million, then our fee is $3,799. Because a mortgage application for over $1 million is significantly more work, and so the bank will be more thorough in their questioning and so on. So that's basically what we do. And again, as Ludo already mentioned before, our fee is luckily tax deductible, so you get back approximately 38% the year after you bought. So that's a nice benefit from the tax authorities there.
For sure, definitely. That is so that's a nice gift that you get for sure. Cool. Well, then before we go to the Q&A and the questions that we still have in the Q&A, I'm always very curious how you experienced the webinar, if there are any things that you would like to see differently, etc., etc. Final poll. Feel free to pop it in there. It's always nice to take to a future webinar. Cool. See some nice numbers coming in. If there is anything that you miss, feel free to send it in the chat also to us. We always see it as a learning curve there, of course. And then I already set up some questions. Like I said, if there are any unanswered questions, just pop them in the Q&A now, so that we can answer them accordingly. Cool. Well, thanks very much, guys. Thank you for your feedback. Cool. Then Q&A. All right, Rafaela, your time to shine. You already answered some a lot of questions. Thank you for that.
First of all, I would like to thank you and Robin for the presentation. It was very informative. Thank you. I can see that we still have some questions here. The first one is for you, Ludo. It's about the transfer tax, how it works.
Mm-hmm.
Am I obligated to live in the house bought with 0% transfer tax for some time or years? And what if I live there for a short time and rent it afterwards?
Well, good question. So if you buy a property and you make use of the transfer tax exemption, then yes, you have to live in the property yourself, because you get the exemption by using the property as a residential property. So if the tax attorneys find out that well, you are not living in it yourself and you're renting it out, for example, then yeah, you can get a fine, and they will charge you still 8% as you're using it as a investment property. Well, the time period, it's a little bit of a gray area. We say around 3 years, and then that should be fine. If at that point you want to change into a buy-to-let mortgage and use it as a investment property, then that's fine. Your mortgage will change, but you won't go back to the 8% that was mentioned before. Important, however, to have a look on any municipality that you are interested in buying a home, to have a look if they have a self-occupancy clause. What that is to, the self-occupancy clause is there to make sure that not all the properties are bought up by investors, but that especially the starter properties, the properties under 400K are used for starters and not for investors to buy and then rent out for a lot of years. Every municipality can decide on that rule themselves. So for example, in Amsterdam, it is the max amount is 512,000 euros. If you're buying a property with a WOZ value of lower than that, then you have to live in the property for at least 4 years before you can actually rent it out. Of course, you could sell in the meantime, but you can't rent it out within those 4 years. Other municipalities, they have a little bit of a lower or a higher amount, but the rule in general is the same. If you're buying under a certain amount, then you have to stay in the property for an X amount of years before you can rent it out and use it as an investment. If you're buying over 512,000 euros, specifically in the municipality of Amsterdam, then, and it's the WZ value, so not the purchase price, then the rule is not applicable. So if you're buying at the WZ value of 600K, then you can rent it out immediately and use it as an investment immediately. I hope that answers the question a little bit on both sides of the scale.
Perfect, thank you. I think the next one is for Robin. He's from Teja. What if in the contract it says a type of work, and still are we eligible?
It could be. It kind of depends on what what company you work for. So phase A means that you're a temporary worker, and then you have to have a certain history at the company that you work from. So that kind of depends on where you work, because then they can have set up a certain statement that they say, yes, this person does their job very well, and we expect it to have lasted longer. A phase B or C gives more security to the bank in the end, so they prefer that. So there are possibilities, but they're limited usually.
Perfect, thank you. I think that's it in the Q&A, but I can still see some questions in the chat that were not answered. The first one is from Diana to Robin. How can we estimate the mortgage we can get?
Schedule a call with me. It is actually a very good question, because you can go to pretty much any mortgage website now, and there will be this online calculator. I think we even have one. To be perfectly honest, I'm not necessarily a fan of those. If you try it with 5 different ones, you probably will get 5 different amounts that you can borrow. This is pretty much the same as calling a bank as well. It's an estimate of what you, kind of a range what you can borrow. To give you kind of an idea, it depends on your interest rate, but what percentage of your income you can use to base the mortgage on. It also depends on what range your income is. Again, what percentage of your income can be used. If you have a very high income, so if it's, let's say, over 100 or 150,000 euros, you can a larger amount of your income can be used to base the mortgage on, because it's expected that you need less to actually pay for grocery shopping, for instance. So those are different stacks there. Now, online calculators do not consider this. So they work in a certain range of parameters they use to do the calculations for. So when you actually have your calculations done by somebody that does them for you, you'll know what the exact number is, and there's not a question if that's the case, because then it's actually calculated, as opposed to using a calculator with set parameters. So that's basically how it works, and why I give that remark. Just have somebody check your financial situation thoroughly, so you know what your range is. Definitely don't. You can use it to give a very rough estimate. Never base on an online calculator, please. That's it.
Great, thank you. I can see another question to you, Robin, from Sharon. Are there additional benefits when you have the 30% ruling? Also, if I have it, but my partner doesn't, what does it mean for us applying for a joint mortgage?
Yeah, very good question, Sharon. Thank you. So the 30% ruling, it does give you a benefit. I don't necessarily always want to use it, because essentially a 30% ruling has a maximum duration of 5 years, right? So that means during your first 5 years, you don't pay tax over 30% of your income, which is very nice. What that means is that the bank knows this, that there's a duration of 5 years. So if you live in the country for 1 year and then you buy a new property, then you have 4 years remaining. So that what the bank says, okay, sure, you have a higher income, but only for 4 years. So you have to, if you can borrow, usually that's a range of about, depending on your income, 3 to maybe 10,000 euros that you can borrow more, but you have to repay that not in 30 years, your total duration, but only in 4 years. So that means that in comparing monthly payments for that additional 6,000 euros that you can borrow, your monthly payments are relatively high. So if we don't need it, I suggest not to use it, because that will just mean that your income, that your monthly payments are unnecessarily high. But if you really want to max out, then it might just give you the edge to get that higher mortgage. Now, how it works with the joint mortgage, we can consider both your income, and both your incomes will be considered for what they are. So if there's a part of 30% ruling, we'll include it in the calculations, and you can still borrow marginally more. Yeah.
Perfect, thank you. I think most of the questions were replied. I think there is one last one for you again. It's from Abdel Kader. Sorry if I misspell it. I work and live here, but my wife is working remotely as freelancer in another country in Europe. Can we have a joint mortgage here based on her salary abroad?
So when you're a freelancer, that means that essentially you're an entrepreneur, so you own your own company. So if that's the case and you want to use her income, that's the main thing. We cannot use her income to base a mortgage on here in the Netherlands, but she can be on the mortgage. That's no problem. But then it will only be on only the income of Appelkade. So that's it. So you can buy a property, but just we cannot use her income.
Great.
Yeah.
I think we still have 2 more questions. The Q&A again. Again, mortgage-wise. So the first one: what is the risk of applying the mortgage process after we sign the offer contract?
What is the risk of applying for the mortgage process after we sign the offer contract? If you prepared everything accordingly, everything is fine. So essentially, this is why we do this financial analysis at the start, and we guide you through this process, because we want to know when you put in a bid, not only because then you know what your mortgage could look like, but also that we can set up everything already. Because a mortgage will be based on 2 variables. One is your income, and the other one is the value of the property, or the condition of the property as well. So when we do our due diligence preparation of all the calculations and the analysis of your situation, we know your income, that's perfectly fine. Nothing to worry about. We want to be sure about that. So the only question mark you have is the value and the state of the quality of the property. Now, this is where Ludo already comes in, of course. Knowing Ludo and working with him quite frequently, his estimates of the properties are pretty much spot on. So that really works, and then you already have an idea of what it will be. But it does have to be confirmed by an appraiser. So that's why directly after the bid has been accepted, an appraiser will visit the property. So before the purchase agreement is signed, or preferably, but definitely before the 3 days cooling off period have ended, we want to have this valuation report, because then we know that, for one, your income is okay, but also the property is okay. So if the 2 variables check out, there's no risk anymore to secure a mortgage. So this is our goal as well, to make sure that before the 3 days cooling off period have ended, we already know that your mortgage gets approved. Then sure, it's an administrative step to take care of it, but then you don't have any risk anymore. The only risk would be is if you decide not to tell us, but to do close 15 new loans and buy or take on a lease car. Sure, that affects your mortgage, but that's pretty much it.
Thank you, Robin. And then we have the last one. Lately, the mortgage interest rates have risen sharply. your views on the future outlook.
All right. Let me find my crystal ball somewhere in the mode somewhere. So yeah, what my views are on the short term, because that's something that I can tell you something about what I expect short term. We can see it increasing slightly every week now. We always get notifications when it will increase, and as of lately, I haven't seen decreases now. So I expect still a marginal increase. To what extent? That's hard to say. It has a lot to do with the ongoing things in the world. Of course, that has an impact. The financial situation, inflation has an impact. So I do expect that there will be a slight increase in the next couple of weeks, but I also expect that at some point it will level out again. And on the long term, there is undoubtedly a point where it will decrease again. But I kind of expect that we saw the first couple of months that we had a significant increase, and then it kind of levels out. That's what I expect to happen. Because right now, like I mentioned before, the interest rate is kind of normalized again. And sure, because everything is kind of on edge in world politics and financial situation, so it might have another bump and then go back to that normal point. That's as far as we can expect it right now. But if anything taught us the last 2 years is that a lot can happen.
Perfect, thank you. I don't see any more questions here. So if we missed to reply any of the questions, please send us an email or call us. After this presentation, we're gonna send you an email with our websites and page where you can find us, so you can book a free intake with one of us. So I would like to thank everyone for joining us today.
Thank you very much, Rafaela. Thank you, Robin.
And you?
And thank you to everyone joining indeed. Let's stay in touch.